Every trader searches for an edge, an indicator, a strategy, or something to give them insight for advantage over the market. They continue to look outward, but the real edge? It's inward. The battlefield is your mind. The market simply keeps score. Until you learn this, everything else is just noise. This is The Subconscious Trader, hosted by Invest with Jacob. All right, everybody, welcome to The Subconscious Trader. This is our very first episode. I'm really excited about it. This is a podcast dedicated to mindset and emotion when approaching trading. Now, before you click away, because I know that can sound very dry, one, we'll keep it entertaining, and two, it is simply the most important lesson you can learn as a trader. If you cannot control your mindset, you cannot beat the market. It's as simple as that. The market itself is an emotional entity. It moves to drive emotion. People's emotions. Because who drives the market? People. How are people built? They're built on emotions. How do I know this? Well, my name is Jacob Gabbard, and I am the CEO and founder of Invest with Jacob, where I've helped thousands of traders beat the market profitably. Now, I've had traders who couldn't do it. They couldn't figure it out. They couldn't beat the market. And almost always, these traders could not control their emotion or their mindset or didn't have a plan when they came into trading. On this podcast, we're going to talk about that. We're going to talk about what you do to sabotage yourself, why you do it, and then we're simply going to talk about how to fix it. Now, I say simply how to fix it. It is very hard to control your emotions. If you think about dating or things like that, you can understand where your emotions can take you to places you never thought you could go. So we'll get into all that a little bit more in depth, but we're going to go through this step by step and teach you a little bit about yourself. And that's what today's episode is about. You are the edge. If you can control yourself and get yourself into the right mindset and understand how to trade like a robot, essentially, you can beat the market over and over again. So what does beat the market mean? I want to clarify that. That doesn't mean that every trade is a winner. It doesn't mean that you're going to win 9 out of 10 trades. It means that you have a trading plan that has good discipline, good setups, and good stops, and you execute it perfectly, and you don't break the rules. You don't overtrade, you don't revenge trade, you don't stop out too soon because you get scared. You get all of that out. You get to where you are a robot and you just click buttons when you're supposed to click buttons. Once you get to that point, you will beat the market over and over. So let's talk about our first lesson. The first lesson is simply that the market is a mirror. It is a cruel and unforgiving mirror. It's going to show you how bad you suck at trading, if you do suck at trading. I mean, if you even think about the mirror from Snow White, the evil queen holds it up and says, "Who's the prettiest in the land?" And the mirror says, "Not you." That's a pretty odd lesson to teach kids, right? You're only important if you're the prettiest in the land. That's kind of odd. But anyway, that mirror also unforgiving to the evil queen. It told her the truth. The mirror simply shows you what's in front of it. You. So how does that show up? Well, what kind of emotions do we have in trading? The first one I would say is fear, right? Fear is what drives the market more than anything else. There's fear of missing out. There's fear of losing everything. There's fear of turning a profit into a loss. There's fear of blowing up your bank account. All of these things are very powerful and move us to make irrational decisions. So fear shows up as hesitation, where you're scared to enter a trade. Even though the trade setup is there, for some reason you have a cognitive bias in your brain that won't allow you to enter that trade. So you hesitate, and then the trade goes exactly how you thought because you had the setup, the rules were there, everything was the way you wanted it, but you were scared. So you did not enter the trade. So it shows up in that way. Fear shows up as early exits, both up and down. So you get a trade, it starts to go your way, and after you make 5% on the trade, you get out because you're scared. You don't want to turn that 5% winner into a loser, and the trade ends up going for 60, 70, 80% gain that you should have had if you traded properly. But you were scared to lose money, so you got out too soon. You simply It shows up even stronger, though, in the other direction. The fear of losing everything. You see this so many times, and it's a sad story every time you see it. You see the market start to careen to the downside, and it goes fast. And all of a sudden, the market's down 1%, 2%, 5%. And you're like, okay, that was a bad day. Then the next day, it's down 3%, 4%. And now you don't know what to do, and you're scared you're going to lose all your money, so you just sell. You don't have a plan. You didn't understand where support was, or what your overall objective as a trader was. So you simply just sell, because what happens? It relieves the stress of dealing with losing money. You simply could have stayed in the trade. I'll give you an example. I was in a forum a long time ago, and just listening to what people said in a Facebook group. And a guy got in there and he was talking about Facebook stock. And Facebook stock had been on a nice run. It was up 8 or 9%. And then it had about a 2 or 3% downturn, which was pretty normal. Nothing critical, nothing bad. And he's in there in a panic saying, hey, Facebook just moved down 3%. I should sell it, right? I need to get out of Facebook. My simple comment back to him was, if you believe in Facebook as a company and a stock, and that's something you want to own, you can't worry or fear small pullbacks. The market doesn't move in straight lines. It doesn't simply go up or simply go down. It's going to find support and bounce, or it's going to find resistance and fall. You simply cannot just panic and sell. That's what the market wants you to do, because that creates liquidity for the big guys. They want to buy the market at those levels. They need somebody to sell it to them. So who sells it? The panic people, the people who are afraid of losing everything. So what happens? The market goes down. You panic. It hits the level the big guys want, which they know will be a level that will mentally drive you to want to sell. They're there to pick up the pieces. You sell it to them. The market shoots back up in a quick fashion, so you can't even get back in. And they make all the money, and you're sitting there wondering what the hell just happened. Fear drove you to sell at a place where you could have added or waited for the bounce. Now, should you just wait every time? Of course not. You have to have a plan. You have to have an understanding of, hey, where is it that when support breaks, I need to sell? And that can be very difficult to figure out. That's why we have tools for that. So this is where the overlap between tools and mindset come in. I have an indicator called IWJ Pivot Point Pro. You can check it out on my website. It's an outstanding indicator for individual stocks and the indexes. It tells you when to buy and sell. And this helps you understand in the bigger picture how to get out or get into the markets. So if you have a tool like that and you have your mindset right, you have your fear lined up correctly, and you have a trading plan, then you can have a strategy that you feel comfortable with. To steal a line from Tony Robbins, who I think actually stole it from Dale Carnegie. In any situation that you enter, if you can imagine the worst case scenario, the worst. So, you lose all your money in a trade, right? That would be the worst case scenario. And you are okay with that scenario, then you literally have nothing to fear. Now, losing all your money you might not be okay with, but I'm not talking about losing every penny you have. I'm talking about losing every penny you have in Facebook or whatever. That is the worst case. They come out and they file bankruptcy. They go out of business. They can't pay their stocks. They go to zero. You lose all your money. The reality of that happening is very, very low. It's only happened a few times in the history, and usually it's because of fraud or something like that. So even though that is the worst case outcome, it's a super unlikely one. But if you say, hey, I have 8% of my money in Facebook. If Facebook goes to zero, I still have 92% of my money, and I'm okay with that. Am I happy with it? No, of course I'm not happy with it, but I'm okay with it. So I don't need to worry about Facebook going down. I have levels, I have tools that will help me, and I can figure those things out. So fear is the number one thing that is going to destroy your trading journey. You have to be able to control your fear of entering. You have to be able to control your fear of missing out. You have to be able to control your fear of losing everything. And you have to be able to control your fear of losing money once you get a profit. You shouldn't ever worry about if a green trade turns red if you haven't hit your profit level yet. So that's a more in-depth discussion. But you need to let go of fear and breathe easy, because if you're trading the right size of trade and you're trading the right setups, you will do very well. The next thing the mirror shows you is greed. Greed shows up in over-leveraging, thinking that you know more about the market than the market knows about itself. It shows up with revenge trades, because you say, hey, you took my money, I want my money back. And these two places are where what they say hogs get slaughtered. So they say bulls make money, bears make money, pigs get slaughtered. So many times I have been slaughtered because I've been too greedy. I thought the market would go further on a trade and it didn't. And then it just absolutely ripped down and I lost all the money that I had in that trade. So many times I lost money in a trade and I doubled down on that trade because I didn't let my bias go. I came into the day with a bias of the market. And that's just not a way to win. In fact, it's a way to lose. You should have zero intention or bias of what the market's going to do on a given day. When I sit down to trade, I look at the setups, I look at the key levels, and I play them accordingly, whether it's up or down. I don't worry about whether it's going to go up or down or what I think it's going to do. I worry about what the market tells me it's going to do. Each bar on a chart is a conversation. Each single bar, it tells you where support is. It tells you where resistance is. It tells you when the market is in a momentum phase. It tells you everything you need to know each and every time. You're having a conversation with the market, and if you're not listening to the market is going to destroy you. Think about talking to your wife or your husband. When are the worst arguments that you get in? It's when the other person isn't listening. You tell them something, they didn't listen, and then they tell you something back that has nothing to do with what the hell you told them. And now you're confused and you're angry. So then they get angry and then you start fighting and you don't even know what the hell you're fighting about because the person didn't listen to what they were being told. The market tells you stuff every single day. Does that mean you're going to listen and get it right every single trade? No. But it does mean that it's going to tell you the higher probability of up or down itself. You shouldn't walk in and tell the market what it's going to do. You should walk in and listen to the market. Remember, the best communicators in the world are the ones who listen and then speak, or listen and then act. So listen to the market. Trying to tell the market it's going to keep going up and being greedy, or trying to revenge trade because the market took your money and not listening to what the market is telling you, is a recipe for disaster. How else does it show up? It shows up with ego, and this is it, guys. You are the edge because you have to control your ego. I let my ego get out of control even to this day. Some of the comments on Facebook drive me nuts. I make terrible comments back to them because I'm a fool and a doofus and I can't control some of the things that go on in my head sometimes. And that's just commenting. That isn't trading. I control my trading emotions because I've built myself to do that. But in other places, I have not been able to control my emotions. For instance, driving. You know how many times I tell somebody they're a dumb MFer when I'm driving? I guess I got to get that anger out somewhere, and then the market is not the place to do it, right? So your ego is so big when it should be so small. So many traders come in and tell me what the market is going to do. I don't care what the market is going to do. I care about making money. So if I said the market was going to go up, but I can see clearly that the market is telling me that's not the case, I have no problem flipping to short and making money on that short. If I said that the market was going to go down and the market disagreed with me and started to show a pattern for an upside trade, I have no problem taking that trade. I don't care about being right or wrong. That's irrelevant to me. And it should be irrelevant to everyone. Being right or wrong about what you think the market is going to do doesn't matter. Now you might say, well, if you're wrong on your trade. No, that's not what I said. I said I don't come in with an idea of what I think the market's going to do. I come in looking for trade setups, period. End of story. Now, do I have Elliott wave patterns and different things that I study that help, and price action that help me understand where I think the market is going to go? Yes. And the market will tell me, hey, here is a setup for what you thought was going to happen. And then I'll say, great, I want that trade. Now, if they give me a setup in the opposite direction, I have no problem flipping on a dime and saying, okay, I was wrong. They're going to set up for short. Because I don't need to be right. I need to make money. That is the concept I want you to get through your brain. I don't need to be right. I need to make money. And you should protect your money. You shouldn't be trying to force the market with your money because you're going to lose it. And then you have nothing. The whole idea is to keep your money and grow it, not to try to tell the market what the hell it's going to do, because it don't give a shit what you think. Guess what? You can tell the market it's going to go up all day, and if it's careening to the downside, doesn't matter. You can keep betting on it, but you're going to lose all your money. So your ego has to go away. Drop it at the door and get rid of it. Now, we'll talk about how to fix these things later. First, I want to go through what you're doing to damage your account as a person. That's why this is about you, me, whoever else is trading out there. This is how you damage your account. And then finally, guys, this one kills me. Trading is a boring game. If you look at games of skill that take time to learn, so let's talk about like poker. Poker is a game of skill. That's why the best players in the world get to the final tables in tournaments. That's why, Phil Hellmuth has 14 bracelets or whatever he has now, because he's one of the best in the world. It's why all of these players can play at a level and beat the game because they have discipline. You play probabilities and you play them over time, and it gets really boring when you don't get any trade setups. You're just sitting there watching bars go up and down, and that's simply boring. But it's what you have to do to wait for the setup. Boredom creates over trading, inconsistent execution, trades that aren't there, creates forced trading because you're bored. You're like, well, I think it's going to go long here. I might as well get a long. That will blow up your account faster than just about anything. Boredom is a destroyer of account. Boredom leads to lack of discipline. Lack of discipline leads to lack of execution. Lack of consistent execution will destroy your account. So that's what the mirror is going to show you. That's what you're going to see if you look in the mirror and you're honest with yourself. If you're honest with yourself, be honest. Look in the mirror and say, you know what? I did do that. Don't say, Jacob gave me a bad trade. Don't say this happened. Don't say, well, the market is rigged. None of those things are true. Now, are there ways that the market can potentially be manipulated? Maybe. I'm not here to argue for or against that. But it's not rigged. It's, again, telling you a conversation that you have to listen to. If you're not listening and you're not comprehending that you are the problem, then you're just going to make the same mistakes day after day, account after account, until you're at zero. I know that this is dry. I know that this is not the most exciting stuff in the world, but it's what you have to master to win at trading. It's simply impossible to beat the market without being able to control these emotions that you have in you. Every action that you take is a reflection of an internal belief or an emotion. So if you take a trade, that's a belief that you have that the trade's going to work out. Most traders don't have a strategy problem, though. They have a self-regulation problem. If you simply look at the strategies out there, they almost all win over time. Again, there's no secret magic bullet here, guys. There's no peddling get-rich-quick bullshit. That ain't what this is about. Most strategies work if applied properly over time. But self-regulation is a destroyer of those strategies. So now that we've taken a deep dive into us, what do we need to do next in order to succeed? Well, the next thing you have to understand is that emotional capital is far more important than financial capital. You can have a $1 million account and blow it if you are emotionally unstable. But a calm, grounded trader with 5,000 can grow it into a fortune because they don't burn out, they don't spiral, and they don't implode. It's all about consistency. It's all about taking only what's there and not trying to beat the market in a day. There's no sense in trading a day that's not worth trading. Just wait for the next one. The market's open 6.5 days a week or 5.5 days a week. There's plenty of things to trade at all times. So there's always another trade setup coming. There's always another chance to get a good, sound trade and use your strategy. If you have a strategy, you should use it day in and day out. If you don't, I have plenty of strategies you can use. IWJ Pivot Point Pro being probably the best one. You can check that out on my website. It gives you the trades. It tries to take all the emotion out of the game so that you can trade profitably. Now, what is emotional capital? What does that mean? Because I said emotional capital is more important than your financial capital. So let's talk about the first thing, staying objective under pressure. Rick Pitino once said, luck is when stress meets preparation. So you are prepared for the moment when it gets there. And that's why guys like Michael Jordan, Kobe Bryant, Larry Bird, Reggie Miller were all able to make shots at the end of games to win games. The pressure was at the highest, but they were so prepared and so emotionally ready for that. They call it luck if they make some of those shots. You can call them lucky, but they weren't lucky. They were emotionally prepared for that stress. Notice I didn't say LeBron James. All you LeBron lovers can, anyway, that guy couldn't make a game winner if it fell on him. If it was a dunk, how's that? He couldn't make a game winner if it was a dunk. LeBron is the GOAT. These people, I've never watched MJ. Anyway, side note. Stay objective under pressure. When the market is moving fast, you got to know what the levels are. You got to not panic. You got to not have that fear and sell. If you're prepared, when I'm trading and the market starts coming down, I already have the targets. I know where we're supposed to go. So if they come to the downside, I know where I'm looking for the market to stop. If we're going to the upside, I know where I'm looking for the market to stop. Now, if it doesn't, we adjust. We're not just taking a trade because we think it's going to stop there. We want to set up, but we're prepared for the moment. So many times the market starts moving quickly and people start chatting in my room. What are we going to do? What's going to happen? Is this a C wave? Is this a crash? It's over. None of that. We're going to wait patiently, quietly in our mind for the market to reach a target, give us a setup, and then trade the setup. If we miss a trade, we miss a trade. There's nothing worrisome about that. There's another trade coming. But we wait and we use our emotional capital to say we have a game plan, and the game plan is going to be executed. That's it. At all times, no matter how fast the market is moving, we have a game plan. And that's what you have to have. You have to detach yourself from outcomes. So this is a really, really important concept. I had a guy in the room today, actually, take a small profit on a trade because he was getting too nervous. And I said, that will hurt you in the long run. And he said, no, I made a profit. Right? But the idea is the way the trade program is set up, we have targets. And if you take profits before the targets, the whole risk reward doesn't work out, the whole strategy doesn't work out, and the whole trading system doesn't work out. Now, more importantly than that is that you reinforce bad habits into your brain. So he took a small profit. Market came down a little bit, then shot much higher. He could have had the bigger profit. He could have lost if the market came down. The outcome is irrelevant. Detach yourself from the outcome. Because a good setup is a trade that follows the strategy. If you lose, that is a good trade. If you win, it's a good trade. If you do something out of character or away from the strategy and you win, that's a bad trade because you just reinforced a bad habit into your brain. You just said, hey, that worked. Do it again. Yeah, it worked that one time, but it's not part of the strategy. It's a wing it trade, a off the cuff. Oh, let's just try something. Let me put $1,000 on black and see if it comes up black on roulette. That's just a proposition, a 50-50 proposition. We want probability in our favor. We want strategic trades. And if every trade that you take is strategic, the outcome is irrelevant because you will win so much more than you lose. You will be a profitable trader. But so many people get attached to winning and losing every single trade like it's important that it causes their mental state to go awry, and it causes them to chase, make revenge trades, make bad trades, say the strategy doesn't work, all kinds of different things that send you down a track that doesn't work, that sends you down a track of running off the cliff and blowing up your account. That's what it does. So detach yourself from the outcome. The outcome of the trade is completely irrelevant. The strategy and the setup of the trade is what matters. Now, how else can we have emotional capital? Well, we can execute consistently during uncertain times. So, again, if the market is ripping to the downside and then they give us a setup for a long, we take the setup. It is a trade setup that we have on our plate. Even though the market looks like it wants to crash and continue going down, we have a setup for a long and we take that trade. Yeah, it looks really scary at the time, But that's what they want you to think. That's what the market does. That's how the market gains liquidity. We'll talk about this in another episode. But the market needs liquidity. They need people to want to sell the market if they're going to keep buying. So once you get to a certain price, the market becomes unattractive to buy because price is too high. So the big guys who want to keep pushing price higher have to be able to buy the market from somebody. But nobody wants to buy the market, and nobody's really selling the market either up there because it's a bull move. The market continues to move higher. So what do? They have to create sellers so they can buy the market. Well, how do they create sellers? They dump a whole bunch of sells on the market. They drive price down really fast. They create panic. And as soon as everybody panics and starts dumping their shares, the big guys are there to scoop them up. That's the liquidity. And then they drive price higher. They stop out everybody. They take all their money. Price goes higher than it was before. And all the people who got stopped out are now chasing, and they're FOMO trading, driving price higher again. That's how you get squeezes. So all of the trades that appear should be executed in the strategy regardless of how uncertain you are about what the market's going to do. It may break through and you may lose 3 or 4 trades in a row. That's happened lots of times. Losing is not a bad thing. Losing is learning. And you will learn more from losses than you will from wins. So detach yourself from the outcome and then remain consistent during uncertainty. And then finally, the biggest thing I can tell anybody is when you are starting to feel angry or too happy, or you think you're going to make a trade that you know isn't part of the thing, get up and walk away. Go for a walk. Go play with your kid. Go talk to your wife. Go make a phone call. Go outside. Go eat a sandwich. I don't give a shit. Don't trade. If you feel yourself worked up emotionally, walk away from your computer. Calm yourself down. Watch a funny video. Meditate. I don't care what you do. Just calm yourself down, come back, and then trade the next setup. It sounds really simple. It is really freaking hard. Really hard, guys. But the thing about it is, when you are able to rein this in, when you are able to control your emotions, then you move from being a gambler who will ultimately blow up their account to being a professional performer. That's what happens. When you can control your emotions, when you can control your boredom, when you can control your ego, and all of the things we've talked about, you move into professional category trading. That's where you want to be. That's where the money is made. That's where the consistency is. That's where we want you to be. All right. I'd like to keep these around a half hour so that they're not too overwhelming for you. So again, this is our first episode. We're figuring it out. If you have feedback, please give me feedback in the comments. I don't care if it's negative or positive. I want to understand how to make this better for you guys. In our next episode, we're going to continue talking about You Are the Edge. We'll be going through self-awareness. We'll be going through how your identity drives your behavior and how your internal metrics are greater than your external results. Those things are very important. And then after that, we'll start looking at how we fix these things and how we move forward from there. I hope you guys have enjoyed episode 1 of the Subconscious Trader podcast. My name is Jacob Gabbard from Invest with Jacob. Have a great night.